Hi everyone, this is Peter from the Mindful Share Trader blog and welcome to video number 4 in my chart reading series. Today I'm going to talk about volume and show you how it relates to price action on the chart, what we can read from that and how it can give us a better idea of what is really going on. It's not a long video and it's just as a general overview, and I'll go into more detail about particular price volume setups and trading strategies in subsequent videos. Now, I just need to point out that this video follows on from an article that's up on my website titled Volume, the Fuel That Drives the Markets. And I'd highly recommend pausing this video, read that first. The link is on the screen here and you'll get a much better understanding of the concepts I discuss on this video if you do that. Okay, so let's get stuck into looking at the chart and analysing what we can see. And today I have picked the gold futures monthly chart. The reason I'm looking at the monthly for this is that when I am looking at trading a particular time frame, I will always try to pan out 1 to 2 time frames to look at the bigger picture of what's happening. So for example, if I'm looking to trade the daily chart, I'll pan out to at least the weekly and usually the monthly as well, especially if I'm planning on longer term trade. What I really like to see is harmony between the charts in regards to the story they're telling me. It's very risky, for instance, to take a long trade on the daily chart, but the weekly showing you weakness and telling you that maybe you should go short. So they should hopefully all line up and tell you the same story. So we have this monthly chart of the gold futures contract, and the very first thing I do with any chart is I look at the volume action, and in particular I look for abnormally high volume. And as you can see on this chart, we have a couple of high volume bars here. We've got these two here and we've got this one over here. Now if you've read the article I mentioned at the start of this video, you'll understand that high volume equals activity, and more precisely the activity of the market professionals, or as I like to call them, the smart money. So we know there's activity there on those bars. So we've got these two high volume bars here. These are the ones here, and we can see that they coincide with a change in the trend up here. Now, of course, we're seeing this with the benefit of hindsight, but what we really want to know is how we can see a potential change coming at the time. So let's look at the first bar and we'll see what it's telling us. We'll just pan in a bit. Now, this first bar here, it's widespread, very high volume, and is closed just off the top. The very high volume for me straight away would have been a warning that something was going on. Most people would look at it and think, wow, it's going higher, I don't want to miss out, and I'll rush in and buy it. And of course that's the trap. Now if we look to the left of this chart, and we'll just pan out here quickly again, we're just going to try and get that to work. Okay, there we go. We can see that there are no previous highs at that level to the left of the chart. If there were, we could possibly assume that the high volume might be due to previously trapped in buyers selling up at this level, and then it was being absorbed by the new buyers coming through. And we call this kind of volume absorption volume. Now, absorption volume is fine, and it's a signal that potential higher prices are likely. In this case though, where there is none of that and we are into fresh new ground on this extreme volume, I would have to be wary. I actually remember at this particular time that the news on gold everywhere was very bullish. They were talking about it going to $3,000 an ounce in the media, and there was a kind of gold fever everywhere, and that was a warning for me. I've been in the markets long enough now to know that usually when everyone is talking about something or buying the same stocks, it's time to be very wary. So let's look at the price volume action on the next bar. We'll just zoom back in on that. Now that's this bar here. Okay, and we can see this as a confirmation that the first bar was full of supply. How do we know that? Well, we have another widespread bar, again on very high volume, and have a look at where it closed. Sorry, down there, that's where it opened. Right at the bottom. And if you think about it, if the first bar was buying, why did the second bar reverse direction? If strength was coming in, in the close of this bar. At the very least, it should have been in the upper portion of the bar, and indeed above the previous close, but it wasn't, and we instead we see a classic kind of 2-bar reversal. Now, just because we see weakness appearing up here, it doesn't mean the price is going to immediately crash either. Usually the price will continue up for a while, and again it's crucial to look at the volume, which you might see is decreasing as it struggles on. This is because the professionals have sold, they're basically out, and they've got no real interest in higher prices, and the amateurs are trying to take it up. It may also stay in a sideways range for a while, and as we can see here, we'll just zoom back in again on that, we can see here it went sideways for a while. And that enables a gradual distribution of the stock to the unwary who still believe higher prices are coming. And we see this a lot, where selling is made to look like buying, and at market bottoms, of course, it's the opposite. Now, it has to happen this way because if the professionals want to make any money, they have to be able to offload to the amateurs, which is their main market. And if they offload too much too soon, they'll adversely move the price against them. And so they kind of disguise their selling to make it look like buying, and so they can get the best price they possibly can. And they do it gradually over time, so they can maintain those higher prices. And if you have a look on this one, it took them, a year to distribute that stock there. And we call this blue area up here, this is a distribution zone, and if we see that down the bottom of the market, we call it an accumulation zone. But I'll do a separate video on that later on. So what we'll do now, we'll just have a quick look in detail at what's happening on this chart after this sign of weakness, and then that way you'll get a better idea of how important looking at volume and price action is. You'll notice I'm not using any indicators, and I don't really need to if I can read the chart and I can see the action in real time. Indicators for me just lag too much, so I don't find them very useful for my style of trading. There's also a post up about indicators on my blog titled Charting Software Indicators, 5 things you need to know before using them, which I would recommend reading as well. Okay, so with this chart, we'll have a look and just very quickly see what has happened since this weakness came in. We can see here that the price has gone up here. The price spread's narrowed on this bar, and the volume's dropping, so it's kind of looking fairly weak. It's come back up into this area of supply. There's selling in there, and then the price has just dropped in straight away after that, back down to support, and then it's pushed up again back into this same area of supply. So we've now had 2 further signs of weakness there, and then it just rolls back down to support again, and then it's pushing up again on decreasing volume here as it's trying to go up here. Got another small 2-bar reversal here, so that we've got three signs of weakness there after these 2 bars, and then the price just rolls down again to support. And then the next bar here is a very low volume, narrow bar. We really just got no demand for higher prices at all in there, and then next month the price just plummets through support, brings in a whole load of volume because of the selling, and probably a bit of buying in there as well. And then from that point onwards, the price is just rolling down the bottom of this channel. You can see it hasn't even got above the midline of this channel here, which is fairly bearish. And I can see that it's heading down to test this support line down here. And until really it gets up through the top of this channel and breaks the trend, we wouldn't even look at this for a trade. Not off the monthly anyway. I mean, you might people do trade between these 2 lines on the weekly or the daily, and you can do that as well. So yeah, that's basically it for this bit of an overview of volume. Now, if you click on the yellow button here, you'll be able to subscribe for my YouTube channel, and you'll get notifications on any further videos and that I'll be putting up. Also head over to the Mindful Share Trader blog at mindfulsharetrader.com, and you'll receive updates on all my content as well as extra content that won't be on the blog. Thanks for watching, and until next time, bye for now.